Felix here. Good morning to you. A triple threat to tech stocks today, from debt ceiling, Fed's potential higher interest rate hikes, and the Chinese economy wobbling a little. So we're seeing some of the tech stocks this morning losing some of their gains. Palantir down 3%, Nvidia down 1.6% to 394. A few of the big boys losing some money. Tesla also down 1% at 199. And we're going to look into what that all means, so it all ties together so you can understand the market better. That's what this is all about. I used to be a horrific investor, lost half my money, and then I became an investment banker. Seems to be the qualification for becoming a banker. And I learned the inside track, so to speak, and I decided I was going to share that with everybody, because I also learned there was an incredibly unfair system that basically takes from retail and hands it to hedge funds. So for that reason, we're also running today, in literally a couple of hours, a live webinar where I'll teach you how I trade and also be doing some live trading with you. And you can ask me a ton of questions. You have to register here. Go to felixfranzadog/webinar. Kicks off at 11 a.m. Eastern time today. Now, Biden, the president, El Presidente, and the House Speaker McCarthy are essentially saying the debt deal is a done deal. It's cleared the House Rules Committee Tuesday night, which is good. And even though a few people are trying to do a bit of a coup d'etat with respect to McCarthy, it looks like it's going to pass. So as long as it passes before June 5th, the US doesn't run out of money. After June 5th, the US defaults. The market seems a little bit more calm on that front. Bond markets, yields coming down, and that's all kind of good. Who's won and who's lost in this? I think who lost is the US taxpayer. I think that's for sure, because more money squandering is definitely the outcome of this. But there is a but here. Former Treasury Secretary Summers, lovely chap, he warns that rates could go higher. He thinks interest rates should go another 0.5% higher. And taxes are going to rise in the long run because you've got high inflation ingrained and this massive government debt bubble. So that's bad news on two fronts. Why? Because higher interest rates, my neighbor is drilling. Isn't that lovely? Higher interest rates, happens in Monaco too, are 1% increase in interest rates. I hope he's going to stop soon. Basically shave a percentage point off, 10% off a growth stock. So 1% up, 10% down. That's sort of the rough maths on that. Smash the like button and the drilling may stop. That's all I got to say on that front. But he's basically saying, my guess is that Fed funds are going to have to get to a 50 basis points higher of where they are right now. And that's part of the headwinds. Other headwinds are coming from the East, the Far East. The Chinese growth story is looking pretty disappointing. If you looked at the charts, and we look at them in a second, China, at that reopening rally from last, October till about 2 months ago, and it's tanking. Tech particularly, major disappointment. We also have Europe essentially in stagflation, recession in Germany, still high inflation. The US is at the risk of a recession. So is it all bad news? No, it's not necessarily all bad news. AI is going to solve it all. No, not quite. But AI, and I'm not talking about necessarily NVIDIA here, but AI is likely to improve profit margins in the long run, right? Because companies can run their business with less people, or they can run a larger scaled, more efficient business with lower cost bases. So there is definitely something positive in that. So I'm not totally bearish, but have a look at China tech, for example. Let me just put up a chart for you here. One moment. Where is it? Here it is. And no, it's not the China tech chart, is it? Look at something like Hang Seng Tech, HS Tech, Hong Kong Tech Index, and look at that. I mean, that's pretty bleak if you pop in some moving averages there and so on. It's basically, we were at 4,800, now we're at 3,600 and falling, another 2% down today. CSI 300. Why is it inversed? That'll do. Similar story, as you can see. It was trading in January at 51. It's trading at 42 now. So the the opening story that we had here from November, when we went up very, very significantly. We went up 34%, and now we're kind of halfway back down. So it looks like a fairly miserable outlook. If you look at Nvidia, on the other hand, that's the thing that China seems to be missing, is this kind of a story, still flying, but pre-market some profit taking here at 393, so losing the $400 mark, just trading below $1 trillion now. Yeah, I just recorded another video actually on Nvidia. I'll pop that out later today so you can see my thoughts on that. I'm still cautious, I would say. If you've got questions, smash them into the chat here, and I will do my utmost to answer all of them. What time did this start? 5 minutes ago. Frank, good morning to you. You think my neighbor is a serial killer? Yes, possibly. Do you think AI PCon tomorrow will be a catalyst for Palantir? So Palantir is hosting a sort of an AI event tomorrow. I think it's a slightly rebranded event. I've seen these before, and they were sort of product explanations where they get a bunch of existing clients into a room and they all explain us how marvelous Palantir is and how it's changing their lives. And that's super powerful. I mean, it's like, the ultimate testimonial. So good, yes. But the question is, are they actually going to announce a product? Are they going to announce exactly how Palantir's AI product really works and how the business works? I think that would really do it. If it's just sort of a product explanation thing, I don't know. They tend to be a little bit cryptic. So we'll have to see. But it is, well, it was up 7.7% yesterday, down 3.3% this morning, but still trading at 14.22. I mean, that's a rally and a half. So that's an AI flight path there. Jerome, that's a good question. Jerome, one of my coaching students. Well done. What happens to the S&P when the JOLTS numbers are coming out today at 10 o'clock? Job opening numbers, which is the most forward-looking unemployment figure that we have. Think about it. Like, if you're going to, as a company, lay people off, what are you going to do? The first thing you do is you call HR and say, pull all of our job adverts. And that's essentially what JOLTS measures, open available jobs out there. So adverts essentially. And we're expecting that to be lower. I mean, 9.2 to 9.3 million is sort of the expected zone. Last month was 9.6. If that comes in higher, then we're going to get higher interest rates for sure, I would say. If it comes in on the low end, then it means the recession's coming. So it's kind of a rock and a hard place kind of type situation. Like, which one would you like to be hit with in the head? So I don't think there's really a clear winner from the data. I sort of don't think it's really going to help anything. Costa Sol, you're missing the Dell. Costa, what would you buy? I mean, look, I can't give you financial advice, and I don't, disclaimers and all that. But I mean, obviously, SPY, you can't go particularly wrong with it. You might also want to look at like maybe subsectors of that, something like the quality index, like SPHQ or something like that, or maybe the growth sector if you prefer. But I kind of like quality, which sort of looks at high gross margins and earnings, consistent earnings growth and stuff like that. Internationally, there is something called the MSCI Global Quality Index, which I quite like, and there are a bunch of ETFs that track that. So that might be something to look at. And by quality, I just mean these are companies that are already profitable with good margins and a good track record. And that's kind of what I like for the bulk of my money. If you're more growthy, then okay, you need more risk and more time, and then you can find a similar setup, I'm sure, for growth. Adam, Alibaba, yeah, I don't see a light, to be honest with you. I just don't see it. The spin-off of the cloud business is I don't really get it, because that's surely the growth. And it's like Amazon spinning off cloud, right? They haven't done it. Love it if they did it. I'd sell Amazon and I'd buy AWS for sure. And maybe that's the smarter move, is take your money and put it into cloud. But yeah, so it's kind of like, why would they do that? They put the Alibaba CEO in charge of cloud, and then they announce a month later they're going to spin it off. Like, that really makes no sense to me. So I can only think it's a regulatory issue rather than a business issue, because I just didn't get it. It's the fastest growing part, or meant to be the fastest growing part. It didn't grow last quarter, but it was meant to be the fastest growing part. So yeah, Alibaba is an issue. It's not really going anywhere. Just Jantu, good morning to you as well. Feel free, you guys, to ask questions. That's why we do this live every single day, to kind of help you out. What do you think of UiPath? One of Kathy's favorites. I honestly never really looked at it, but let me show you a chart of it. Here it is. Hang on, let me just make this a bit smaller. There we go. So it was trading at one point at something really lofty. Look at that. That's almost funny, isn't it? Not if you were in it. I'm sorry. Oh my God. It's trading at $90. It's trading at 16. So honestly, I don't know a great deal about the business, except that it's obviously was massively overvalued. Sort of zigzagging its way up. Looks kind of bullish and coming down a bit today. And I guess that was just the AI run up. So, I wouldn't necessarily jump on board of the AI run up. What was the earnings? Earnings were good. They beat profits and revenue. That's pretty good. So what I would do, honestly, is, and you asked this, Alexander, I would read the earnings report. ROIC is a great place for that. ROIC.ai. Type in UiPath, and I think, should I read this? Because you're buying a business, and if you're buying a business, you need to understand the business. So click on transcripts, and I'd read the last one at least. And if you're short of time, I'd just read the end of it, which is the Q&As from analysts. Okay, this is the last one. You need to wait for the next one or find it on their website. It's probably on their website. That's what I would look up. But very, very difficult to assess growth companies, because typically they've got very little data to go on. Let's have a look. So first thing I always look at is return on invested capital here. I'm being silked by a cat on my ankles, which is rather lovely. So minus 17%. That doesn't really tell you much. Profit margin's negative. Revenue is growing. At least that's something. Operating margin seems to be improving, but not exactly sure. Book value is $3. So I don't know. It's very hard to judge these unless you really understand the business and you really think it's the bee's knees. So essentially what you want to look for is quality of management. What are they investing in? Are they really the tech leader? I mean, really the tech leader, not like Zoom, as in like it's Skype with a new hat, So that's what I would say on that. And of course, come and join me later on in the webinar in a couple of hours live here today, where I'll teach you exactly how I trade, and also I'll do some live trading on that so you can really see me put it into practice. Will Palantir go back above 20? Andrew Lau. Who knows? Who knows? Possible at some point in the future, likely. When? I have no idea. CRM, super, super volatile into earnings typically, so I don't trade it. I never touch it. VZ Verizon is annoying. Yeah, I don't think that's a particularly great business, but if you get dividends from it, at least that's something. Stephanie, good morning to you. Kiss Canon, good morning as well. Is it true that hedge funds can't beat index? Of course it isn't true. The good ones do. The good ones do all the time. But most hedge funds are just created to collect fees. So not naming names, but I know plenty of people who left investment banking who weren't necessarily the sharpest tool in the box, and they just open a hedge fund, and then they know some people and they collect a bit of money. And most money doesn't chase highest returns. That might sound weird to you, but it's just the truth, because most people manage other people's money, and they therefore don't care. And then they give a little bit to that guy and this hedge fund and this friend and that guy who takes them to the sailing and this one who invites them to the Monaco Grand Prix. And there's that sort of thing going on. So that's kind of like how it works. And then they just charge a couple of % a year, and then they take first 20% of profits or something like that. That's usually how hedge funds price their fees. So yeah, most of them will underperform, but most funds just underperform, right? 90% of funds underperform the market, and the money doesn't leave the funds. Why? Because people don't know what to do with their money. They rely on people in suits, and they have no idea what they're talking about. So really the lesson is become a money manager, honestly. that should be our first role. Like whatever you study at school or university or college or whatever, the first class and the main thing should be money management, because or every job you're ever going to do, you do it because you want to earn money. And then nobody teaches you what to do with the money. And that's just baffling. And that's precisely what we do here, right? So cybersecurity, yeah, I don't really understand it. That's kind of, generally speaking, if I don't understand something, I stay the heck away. Are you optimistic about SoFi? Personally, yes. That's not financial advice, but if you watched a video I did on that about 2 days ago, yeah, I am quite optimistic on that. I actually think they have a good head on that company, and I think it's a good business, and it's proven very resilient with massive, massive headwinds. So yes, I feel quite good about that. Again, doesn't mean you should chuck all your money at it. Very early stage business, and JP Morgan could still drive them out of business if they wanted to, with regulation or otherwise, right? So, but yeah, I think they're doing a pretty good job there. If you look at them pre-market here, Coinbase down 3%, Palantir down 3%, AMD down 2%, PacWest down 1.7%. I don't know if anybody watched my video last night on banking crisis 2.0, I think might be coming. Nvidia 1.7%. Essentially, what I was talking about that last night is that because the US government has no money at the moment, they've got like $50 billion, which is like you walking around with $3.50. It's just sort of the equivalent. They're going to have to raise huge amount of money in the next couple of months. They're going to be issuing tons of bonds. That's how they collect money, right? They just pile up more debt. And that means it sucks money out of the market, but also out of banks, because the money will go into those bonds. And that means the small banks come under pressure again. And the more money leaves small banks for bond reasons and higher interest rate reasons, the more money will then also flee on the fear of another bank run to like JP Morgan and the likes. So I just think there is a chance that we might get a few more banks on the brink, which is certainly something to bear in mind. Now, what's up today? SoFi up pre-market 4.3%. United Airlines up 2%. I haven't seen that in a while. Barber is up 0.6%. Johnson & Johnson up 0.4%. Microsoft up 0.2%. Neo up 0.1%. That's basically flat. Amazon down 0.1%. Apple down 0.2%. So that's kind of where we are this morning. What do you make of poor Elizabeth Holmes having to spend time in prison? I can't say I've really particularly followed that story. Are you implying it is unjustified? How do you allocate capital between big tech, legacy, large businesses, and growth? Any thoughts? I'd say it has something to do with your stomach. How much up and down can you handle? If you look at your portfolio and it's down 35% and you go, brilliant, let's buy some cheap stocks, then you are one of the very few, in which case you can handle a lot more risk. Most people cannot, and then bottle out and sell at the worst possible moment. So you have to make sure you avoid that. And that means putting some money into more stable things, right? And I'm putting out a video today, I think, and I'll go through my portfolio and also how I think, well, how you pick great stocks and how you pick great potential multi-baggers, the 10x stocks. So if you watch out for that, make sure you're subscribed so you get the notification for that later on. But yeah, I think it depends on your age to some extent also. The younger you are, the more risk you can take, but also you don't want to chuck everything at crazy risk, because if you had just bought, Coca-Cola 30, 40 years ago, you'd still be really, really well off. So I think people underestimate the advantage of profits and kind of long-term returns from something like a Microsoft or a Coca-Cola or a Philip Morris or Johnson & Johnson or something boring. And they just think, no, I just need to make 100x, and you don't really. So I'd come up with a split. You can backtest all this stuff. Portfoliovisualizer.com is really good for that. And you can come up with some sense in that, but you just have to bear in mind, you never know where you are in the cycle necessarily, right? So you could be at the top, we could be at the bottom, we could be somewhere in between. You never really know until afterwards. And you have to, so I would generally say the smartest thing to do is just to keep investing every month and have a strict formula for that, and do that on the first of the month before you spend anything else. Skull, that's really kind of you. Appreciate the kind message. Thank you very much. A high-paying dividend ETF's the best. See, I'm not a big dividend fan, and I've made a video on that in the past. I'm sure you can find it somewhere on the channel. But essentially, money in a company is valued at a higher rate than cash outside of a company. We have something called book value, and book value is a multiplier of something like 3 times of what of cash. So if you have $3 in Apple and Apple pays you a dividend of $3, well, that $3 is now worth $1. And therefore, I'm not a big fan of dividends. I wish they'd keep the money and they'd reinvest it and make good use of it. That would be far, far better. And then, of course, you also got taxation in most places. So I'm not a fan of dividend chasing. But I can see the incentive and the excitement of receiving an income. It's just like I think it's smarter to look at capital gains and sell some of your holdings and take that as income than to gun just for dividends. But you can't avoid dividends, so it's a little bit of a moot subject. Take one, Lou. Trading returns. I'll definitely be showing that on the webinar later on today. Links up here so you can see that. And also all my students and everybody has complete access to it. We did a live trading session yesterday. We did one last Friday. We do them all the time so they can see my portfolio. Like, I really believe in being transparent and seeing what it's all about. And Adam, you have a point. Yeah, the higher interest rates, the less value in a sense dividends have. It's true. Do you know about the METV ETF, Kenneth? I'm afraid I've never seen it, never looked at it. There's some really great websites where they sort of deep dive into ETFs, and you can see, always have a look at like, what are the top 10 holdings? That's the first thing I do. If you're buying an ETF, you're buying companies. So just look at the top 10 stocks and go through those and make sure you understand what they are and why you're buying it. What do you think about the oil prices? Yeah, I was bullish oil at the beginning of the year, and that singed me a little. So I've kind of gotten out of the oil thing. Well, the Saudis kind of warned on oil, didn't they? Saying, don't bet against us or something like that. I don't know if they mean that or not. But if you look at crude oil futures, they're down another 3% today. Let me show you the chart here. That's the chart. So it's a very, very, very much a downward trend, which you would sort of expect if you think we are heading for a recession, which I do. So, we're going back in the 67 now. For this is light crude oil futures. CL1 is the ticker, but all oil is roughly, like that. So, yeah, it's politics largely. So I would generally be cautious with things that are driven by politics. Very, very cautious with that. SPACs beaten down too much, possibly. So generally speaking, tech recovers about halfway through a recession as rate cuts kick in. So it kind of depends a little bit on when you think rate cuts are coming. I think, and you can never really time that exactly. It's a bit like, what I was saying yesterday on I'm buying bonds because I think rates are going to come down at some point. They might go up a little bit more, which will hurt me temporarily, but I do think they're going to come down at some point. So you have to have that ability to hold. If you don't, then, it could get worse for sure. Reed says if copper goes down, oil will go down. Yeah, copper is probably an even better recession indicator than oil. Oil is a bit more political and volatile. Andras, what do you think about VIX? Why? I have a VIX trade open at the moment, and I can put it up for you if you like. Let me just log into it. I quite like using VIX as a hedge, but I typically don't buy it. I would set up something a little bit more complex, and as soon as I'm logged in here, I'll show you exactly what that looks like. And that's by using options. I have a huge range of being wrong in that still allows me to make a profit on a VIX trade here. So let me just share with you my screen, which of course we teach it. So if you want to learn some more about that and learn from some investing banking mentors, go to felixfranz.org/coaching and give us a call, look at the website. So here's the portfolio I run for you guys publicly. So here's the VIX trade, and it's up quite nicely. But the beauty of it is that this is the trade. So the red line is where it's trading right now at 17 or just under $18. Now it could go all the way to $14 and I still make money. And in fact, if it went to $14, this would actually get wider and probably be at $12 or $13. And for that, you need to understand how volatility drives options pricing. So the more VIX goes down, the wider my trade gets, which means it gets safer. And then if it goes up to maybe 25, well, that would be my break even. But that's a pretty long move, right? So my sweet spot will be 22. Might not get that, but it's picking up at least a bit today. I might actually close out of this today because I think it's a 10% profit or something like that. So I prefer a range where I'm not saying it's going to go up or down. I'm just saying it's not going to go below 12 and it's not going to go above 25. And I think, I don't just think that's statistically had like an 89% probability of happening. Whereas if you're just buying it, it's like 50-50, right? So you kind of get penalized a lot more. So that's why I prefer these kind of smarter setups. And as I say, come and join us if you can for the webinar later on today. Links down below, felixfranz.org/webinar. That's running at 11 a.m. Eastern time. And let's be live and we do some live trading there. And if you can't make that at all, then just book a call with my team at felixfranz.org/coaching and you can see how we as a team of investment bankers with literally 100 years of institutional trading experience teach you exactly what we do and show you exactly what we do and how to put it into practice. And that's really what's important. So we literally run live sessions every single day. Danzo sharing some gardening advice. Love it. Smash the like button, guys. We only got 130 and about 400 people on the stream, so that would be truly appreciated. In terms of the market, let me just have a final glance at headlines this morning. If there's anything we missed. Debt limit deal heads to the House. Indeed, it cleared the whatever committee yesterday, so that's kind of good news. But yeah, the Chinese economic worries are low manufacturing numbers and so on. But I think it was JP Morgan this morning coming out. Well, was it JP Morgan or was it Goldman's? I can't remember. One of the two said that they're actually still quite bullish on China. And they think if the economy in China doesn't recover on its own, the government's going to introduce stimulus, which they haven't done so far. So that they're still feeling quite bullish on it. But at the moment, it certainly looks like a bear market. Staples. Well, with the debt ceiling done, people have been leaving Staples and buying AI out of FOMO. So that was kind of the trade, which was kind of the early recession trade. So you'd have to think that economic numbers are going to look worse. Watch out for the JOLTS opening numbers today at 10 a.m. Eastern time. That might give you a fair idea of whether the recession is indeed coming or not. Skolb says Dimon, JP Morgan's Dimon. Or did you say that he loves his country and he hopes to serve it in the future? So Dimon might be running for office. That's exactly what we need, isn't it? Good God. Imagine him as a Fed president. He's probably donated enough money to get the job. Felix, one of our coaching students says, you are going on a call with Elliot, one of our head coaches. He's amazing. And he's been investment banker for 20 years for SocGen and various hedge funds. He was a market maker. So one of the guys standing on the floor, like making the market, the London Metal Exchange, enormous experience, really, really great guy. So they are the kind of people that you learn from when you are in our program. If you want to know more about that, as I say, go to felixfranz.org/coaching. Staples. Costa, so did you rent out your apartment for the Grand Prix? I did not, but yes, it is a deal in Monaco. You can lease out your apartment for a month over the Grand Prix, and you get about, well, maybe even like three months rent, or even a little bit more than that. It depends on where your apartment is. So yeah, that can be a good arbitrage opportunity. Elon for president. Well, hopefully not Dimon for president. Coffee with Jesus. What more could you ask for? Indeed. Jesus is also one of our coaches, author of 2 books on options trading, university lecturer. Really, really smart guy. So That's kind of what you find inside the community. I look forward to seeing many of you on the live webinar at felixruns.org/webinar. You have to sign up for that. It is at 11 a.m. Eastern time today. If for some reason you can't make it, sign up for it. I will send you a recording of it, but you're much better off joining us live. Why? Because you can ask questions. It's also a lot more engaging and interesting when you're there live, and you can see me trade live, which again makes more sense live than sometime afterwards. But sign up for it. I appreciate you tuning in and watching and building this community with your likes. It's literally what you do. Every single time you hit the like button, you spread our word a little further so we can help more people get out of whatever misery they're in and allow them to enjoy the beautiful life of sunshine. And thanks for watching, guys.